OPEC Plus agrees to shock oil production hike. What it means for prices. OPEC Plus output hike. What it means for oil prices and the market. OPEC Plus agrees to shock oil production hike. What it means for prices. Global oil markets just received a significant signal. OPEC Plus is opening the taps further than many anticipated. This move, while seemingly straightforward, has complex implications for consumers, economies, and geopolitical stability. Let's break down exactly what happened and why it matters. On Saturday, a key group within the OPEC Plus alliance, comprised of 8 major oil-producing nations including Russia, Saudi Arabia, Algeria, Iraq, Kazakhstan, Kuwait, Oman, and the United Arab Emirates, collectively decided to increase crude oil production by 548,000 barrels per day in August. This is a larger increase than the 411,000 barrels per day that market analysts were generally expecting. The decision was made during a virtual meeting of these producers, as they continue to gradually reverse a series of voluntary production cuts implemented over the past year. According to a statement released by the OPEC Secretariat, the rationale behind this boost in output stems from a perceived steady global economic outlook and current healthy market fundamentals, specifically pointing to relatively low oil inventories worldwide. Essentially, they believe the world economy is strong enough to absorb more oil without causing a price crash, and that current supply levels are a bit too lean. To understand this, it's helpful to know the history. OPEC Plus has been operating with 2 distinct layers of voluntary cuts, separate from their overall agreement. The first involves a reduction of 1.66 million barrels per day, and this will remain in place until the end of 2024. The second, a more substantial cut of 2.2 million barrels per day, was initially intended to last only until the end of the first quarter of this year. Initially, the plan was to incrementally increase production by 137,000 barrels per day each month, stretching out to September 2026. However, this gradual approach was only maintained in April. Since then, the group has been accelerating the pace. They increased output by 411,000 barrels per day in May, June, and July, and now, in August, they're pushing that increase even further to 548,000 barrels per day. But here's where it gets controversial. Is this truly a response to economic factors, or is it a strategic move to gain market share and potentially influence prices before the end of the year? Several factors have been influencing oil prices recently. The typical seasonal increase in demand during the summer months, as more people travel, has provided some upward pressure. More significantly, the recent, albeit brief, conflict between Israel and Iran added a layer of geopolitical risk. This raised concerns about potential disruptions to oil supplies, particularly through the strategically vital Strait of Hormuz, a narrow waterway through which a significant portion of the world's oil travels. The possibility of attacks on tankers in the region briefly caused some vessels to alter their routes. As of Friday's market close, oil futures were trading at $68.30 per barrel for the September expiration Brent crude contract and $66.50 per barrel for the front-month August West Texas Intermediate WTI crude. These prices reflect the current market sentiment, incorporating the anticipated increase in OPEC Plus production. And this is the part most people miss. While increased supply generally leads to lower prices, the actual impact will depend on a multitude of factors, including global economic growth, geopolitical events, and the response of other oil producers. It's also worth considering whether OPEC Plus will continue to accelerate production increases in the coming months, or if this August hike represents the peak of their unwinding of voluntary cuts. What do you think? Is OPEC Plus acting in the best interests of the global economy, or are they prioritizing their own economic gains? Do you believe this production increase will significantly impact gas prices at the pump? Share your thoughts in the comments below. Let's discuss. OPEC Plus output hike, what it means for oil prices and the market. The oil market is in for a wild ride. Oil prices took a significant dip, dropping over 1% on Monday, July 7, 2025, as the Organization of the Petroleum Exporting Countries and their allies, OPEC Plus, decided to ramp up oil production, exceeding market expectations. But here's the twist. This move has sparked concerns about a potential oversupply, which could have far-reaching consequences. The backstory? OPEC Plus agreed to increase oil output by a staggering 548,000 barrels per day, BPD, in August, a substantial jump from the 411,000 BPD increase in July. This decision came as a surprise to many, as it signals a more aggressive stance on market share, potentially sacrificing price stability. And this is where it gets controversial. Analysts believe this move could be a strategic play to gain market dominance, but at what cost? The impact was immediate. Brent crude futures took a hit, falling 80 cents, 1.2%, to $67.50 per barrel, while U.S. West Texas Intermediate crude saw a $1.32, 2% decline, trading at $65.68. These price drops reflect the market's reaction to the unexpected surge in supply. OPEC Plus's decision was based on a positive global economic outlook and strong market fundamentals, including low oil inventories. The group aims to reintroduce nearly 80% of the 2.2 million BPD in voluntary cuts, primarily from 8 OPEC producers. However, the actual increase in output has been less than anticipated, with Saudi Arabia contributing the majority of the additional supply. In a bold move, Saudi Arabia increased the August price for its Arab light crude, a sign of confidence in oil demand. Meanwhile, Goldman analysts predict that OPEC Plus will finalize a 550,000 BPD output hike for September at their upcoming meeting on August 3, further intensifying the market dynamics. Adding to the complexity, the United States is on the verge of finalizing several trade agreements, with higher tariff rates to be announced by July 9, effective August 1. This development could further impact the global oil market and international trade relations. So will OPEC Plus's strategy pay off, or will it lead to a market glut? The debate is open, and the implications are far-reaching. What do you think? Is this a calculated risk or a potential market disruptor?